We're seeing the major U.S. stock averages struggle for record highs on Wednesday. Of course, tomorrow's Thanksgiving Day, and a lot of Americans have food as well as sports on their minds. So joining me on the trading floor today is Tim Anderson of TJM Investments, and he'll weigh in on the fundamentals. Tim, great to have you here today.
It's nice to talk to you.
Well, we saw record highs for the equity averages as well at the open today, but now we're seeing the stock averages pull back from those highs. So what do you make of today's action, especially on the heels of mixed U.S. data?
Well, I think that clearly this is not going to be a very monumental day going into almost a 4-day holiday with only half a day on Friday. But I think that, yesterday's action just confounds the bears and those that have been looking for a pull. Only a week ago we were talking about whether or not this was the beginning of a correction. And now we've got the Dow, the S&P, the NASDAQ, the Russell all closing at new all-time highs yesterday. We're 25 full trading days left in the year. I just really doubt that we're going to have a meaningful pullback between now and the end of the year. It's just not in the game plan for anybody that's looking to peg their, book their performance numbers.
And Tim, if we take a step back, we know that the bigger picture fundamentals are the tax reform expectations as well as the Fed rate hike. We did get commentary out from Fed Chair Janet Yellen yesterday about how we need to be careful about hiking too fast and how that will affect inflation. But how do you see those two events weighing on the equity market?
Well, the numbers for the economy have been very strong for the last week and a half. That's one of the reasons I think the market has been acting so well. It's almost like catching up to the economic news rather than predicting it. You haven't really had strong inflation numbers yet, but it's just inevitable that we will eventually get that if we're going to have 3 consecutive quarters of GDP growth 3% or better.
And last but not least, Tim, before I let you go, I do want to take a look at what's happening around the globe. We know political developments in the UK as well as Germany will continue to be in the spotlight. And of course, if anything pops up on the geopolitical front, we know that will make headlines as well. But prior to the interview, you mentioned what we're seeing in terms of the yield curve. So how important is that?
You know, the yield curve is really an anomaly here because it's really kind of messing with a lot of people's heads because it's very flat. It's flatter than it's been since 2007. If the curve goes inverted, that's usually the sign of an economic contraction around the corner. But this time it might be different because, yeah, okay, the curve, maybe it'll go inverted by 10 or 15 basis points, but rates are still very, very low. So I think it's an anomaly this time. But the economists and the equity strategists are really going to struggle with it.
Well, Tim, we will be able to see how this plays out. So thank you for weighing in on this very important topic and have a happy Thanksgiving.
Sure, and happy Thanksgiving to you.